Welcome back to this channel. Today I'm going to take you guys on how you can trade break and retest. Not the one they taught you, not the one you learn, which is the one you can only take trade with 1:2 RR. No, 1:2 RR, it depends on you. Like it depends on you, but 1:2 RR is not something I take home. It is not okay for me. It's not okay with my emotions and everything. That 1:2 RR, it is not okay by me. So I'm going to show you how you can trade this simple break and retest using 1 hour. Your bigger time frame is 1 hour. From your 1 hour to 30 minutes, there are things we are going to check out on our 30 minutes. From this point, we take it down to 1 minute for your entry. And this is going to give you a bigger RR, ranging from 1:15 to 20. I would have said 1:25 and down, but because this is a currency pair, you can only target 1:15. And I'm going to show you how you can use this same strategy for re-entry. Instead of you to target 1:15, you can re-enter a trade. Then once you re-enter a trade, from 1:15, that's supposed to be your initial take profit, you can make 1:30, 1:40 using risk re-entry setup. So let me go to the chart. Let me show you how you can do this step by step. The only thing you will do for me is for you to subscribe to this channel, turn on notification bell, like and share, comment. I'm going to be using GBPUSD. H1 has to be my bigger time frame. So this is to say you can day trade using this strategy. You can day trade. You come to the chart. Once you see it, you take a trade. If you don't see it, you stay off. You are only taking one trade when it comes to this strategy, because most of the times market can just come and do a thing. So take just a trade. So let's go to the chart. Let me show you how you can implement this step by step. So right here, I'm on my GBPUSD, and this is my H1. And on this trading strategy, we are going to make use of 3 things. Number 1 is market structure. Number 2 is indicator. Number 3 is a candlestick. So these are the 3 things we are going to make use of. So first, let us start with our market structure before we add our indicator. So you can see, let's mark our trend. We've seen this structure right here. We've seen that structure right there. What happened is this market was rally to the upside. It was rally to the upside. The market was rally to the upside, breaking structure to this upside. It came and give a base right here. From this point, it breaks structure to the downside. So what did you see? This place now, this zone right here, once this market break this structure, we have a change in market structure. We have, of this point, our mindset is telling us that this market is about to change its direction. So therefore, we have to mark out that zone that leads to break of this structure. We are expecting the market to come back and retest the zone that leads to break of this structure, instead of us to take a trade on the retest of this wick itself, of this base. We are not trading that way. So we have to mark out the base phase that lead to a retest of this structure. So once we mark out the base, now it is for us to add our indicator. Note, it has to break out. It has to break this zone right here with a candle, not a wick. with a candle. So let me delete all these ones. So we've seen that this market was able to break this low with a candle. Let's check. The market was able to break this low with a candle. You can see here was a high. Here was a high. Let me show you, if for you to understand if truly this market breaks structure. So you've seen this market was able to break structure to the upside right there. See that this market closed above this line that I marked, this line. I'm trying to indicate this zone here before we do anything. I'm trying to indicate this zone, this high, this very high right here, before we do anything. So you've seen that this market was able to close above this very high. It closed above this high with a candle. So this shows you that this market was bullish before it finally came back and break this last low. You see, here was the last low, and it came back and closed below this low. This is to show you that this market has changed its direction to the downside. So now you should be expecting a sell. So it is now for you to check for that zone that lead to the break of this structure to the downside. You want this market to go back to that zone, to go back and retest the base that lead to break of that structure to the downside. And the base happened to be this. It happens to be this zone. You see this candle right here. It happens to be this very zone. So you mark out that candle. You marked out that candle. Mark out this candle. This candle right here. You map it out. So another thing is for you to be sure of what you are doing. We have to add one indicator to it, and that indicator is 50 EMA by Dear Sweet. That is the one we are going to be using, not the normal EMA. This is the one. So I'll go to my indicator. You will search EMA. Once you type EMA, EMA will start coming up. The one you are going to choose is this EMA. Look at this in EMA. 20 EMA, 50 EMA, 100 EMA / 200 EMA by Dear Sweet. That is the one you are going to choose. Once you type on it, this EMA will be on your chart. So it is already on my chart. That is why I'm not tapping on it. So let us go back to our chart. So right now I'm going to enable my EMA. So I have enabled the EMA. Oh, sorry, there are another thing we have to do. So once you enable this EMA, this is how it's going to look like. Sorry, let me go to setting. Once you enable this EMA, this is how it's going to look like. It comes with a lot of plots, which makes your chart very messy. You've seen. It makes your chart very messy, but we are looking for only one. So now you go to setting on this EMA, you type on this dot, you go to setting, you will disable the red, that is the number 1. You disable the number 3, you disable the number 4, you allow the number 2 to be, and you leave it that way. You click OK. So once you're done with that, this EMA is on your chart. As you can see, this market was able to close below this EMA. This is another strong signal for you. It was closing above this EMA. It also come and close below this low. This is a strong signal to you that this market is going to go down. So therefore, after which you marked the base that led to a break of structure to the downside, which is this one, after which you mark the base, you have to go back to your 30 minutes. Go back to M15. Yeah, let's go to M15, or 1 minute. It's either your M15 or 1 minute straight. Let's go to our M15 and mark the last bullish candle inside the H1. So let's go. So guys, do not forget to subscribe. Turn on notification bell for this tutorial. So this is the zone. This is the H1 zone. Here is the H1 zone, and here is the candle that we mark. This candle here that we mark. So we have to scale. That candle is still our M15. That is the M15. So the H1 candle we mark still the one that is inside M15 right there. So we have to go back to our 1 minute. There's reason for this. Let's go back to 1 minute. So right, here is the zone. And our 1 minute is what I said we should go back. So on our 1 minute, we are going to check the last bullish candle inside this zone, which happens to be this one. It happens to be this long one here. But you see this red candle that has this wick, you should not play with it. The wick has to be included. So you mark it out and expect the market to come inside there and give you what you want. So I'll mark it out to the future. I'll mark it out to the future. You can just mark this one because this huge candle here, you mark it, you mark that one. If not, this is the candle you're supposed to mark along with it, but just mark this one. Mark this candle. This huge candle here is what we mark. So now it is for us to scale everything to the future. We scale everything to future. We are expecting the market to come inside in the future. So you see, this market was able to come inside that line in the future. Upon this market coming inside this line on the future, it is for you to take a trade once you see an opposite candle on this zone. This is why I said if it is one trade, take only one trade and you leave it. Because the day you see an opportunity, if you are trading with, maybe you place a trade with $5, that $5 can literally turn to $100 if you know what you are doing in this market. It can literally turn to $150 if you know what you are doing in this market. So you place your trade at this point in this candle. Once this candle closes, you place your trade right there. So I picked my short tool. I'll place my trade here. And you can target 1:15. That is because you don't want to be greedy. Your stop loss has to come a bit above the zone. This is GBPUSD. The stop loss is 2 pips. It's very little. So you can go 1:15 or 1:20. Depends on you. Let's say 1:15 or 1:20. But let's go 1:15 because this is a currency pair. So our target is 1:15 and we got our 1:15 right there. But let's go to our H1. You got your 1:15 right there. Let's go to our H1. So on that trade, you've gotten your 1:15 right there, right here. That is your 1:15, which is just few pips below this low, below this previous low here, below this very low here. this low. That is just few pips below that low. So you've gotten your 1:15 right there. So let me show you how you can re-enter a trade after which you've taken this trade. Let me show you how you can re-enter a trade. So on your 30 minutes, there is something I want to show you. This is when this indicator that you added, this 50 EMA that you added, this indicator that you added to your chart, this orange color becomes very useful to you. So once the market pulls back, it is for you to look for this market to come in contact with this indicator. Once this market come in contact with this indicator, this has to happen in your 30-minute note. That's to happen on your 30 minutes. So once you come in contact with this indicator, it is for you to move down to your 5 minutes. It is for you to move down to your 5 minutes. Let's go. I will show you what you will do on your 5 minutes. On your 5 minutes, you have to turn your chart to a line chart. I'm doing that right away. So you can see here is where I marked. I said you should go back to your 5 minutes. You coming to your 5 minutes, you want to search for a market break of structure, which happens right here. Once that market come in touch with that indicator on your 30 minutes, look for a break in market structure on your 5 minutes, which happens right here. Once that happens, mark out this zone that led to that break of structure. Mark it out. Once you mark it out, turn it to a candle. Turn it to a candle. Note. So now that you've turned it out to a candle, move to your 1 minute chart. So right now, you are on your 1 minute chart. As this market come into this zone, here is the zone right here, and here is the market that come into. As this market come into this zone, what are you looking for? So as the market come into this place, the only thing you are looking at is a different candle. That is a candle with another color. You can see it was bullish candle that came into this zone, and then follows by this red candle. So once you see this red candle, it's for you to take a trade. So therefore, you are going to place your trade. You pick your short tool. You place your trade this way. Your stop loss come a bit above that zone. You know, this is GBP USD. They always have a very tiny pips. That is 2 pips is their stop loss. You target 1 to 15, or you target the H1 zone. So let's go to our H1, which is the H1 low that we target before, which gave us 1:15, which was our first entry. So that is where we are going to target. So this line here is that our H1 zone. So if we target this line, you've seen that we were able to get 1:69 right here. So let's say that you were risking $5. It depends on your capital. That is, if you have a capital that your 2% risk can be $5, then the first entry was 1 to 15, while the second one is 1 to 69, Add up everything. This will be about $400 for these two entry. So the only thing is about you try your best to be patient. Be patient, be patient, be patient. Do not be eager to trade all the time. That is why when you have a bigger capital, when you are trading, it boosts your ego, because even though you take one trade in a month, you won't have anything to worry about. But when your capital is very small, you will be trying to take trade all the time, and you trying to take trade all the time will also makes you to lose all the time in the market. But if you be patient and try your best to make sure that you wait for this setup to occur and all your entry rules to be made before you take a trade, you will be profitable. You shouldn't be eager to take trade all the time. Those on my signal, most of them want me to give them entry every time, every day. But you know, if I do that, I'm doing very wrong thing to you. I'm doing very wrong thing to your capital, because you will not go home with that capital in just a month interval. You will not go home. You may, if you are taking a trade that gives you 1:2 weeks to reward, and you are able to take 3 trades this week, you lose 3, you win 1. Ask me, or let me ask you, are you profitable? No. Maybe you come in next week, you lose 3 trades, you win 1. Ask me, are you profitable? No. You come in the upper week, you win 3 trades and you lose 1, or you win 2 trades and you lose 2. Ask me, are you profitable? The truth is no. At the end of the year, plus and minus, you see that you have a long way to go. So this is why you should be patient when trading and stick to your rules and your strategy. Let's go to another setup. Let's go to 30 minutes. That is if we see an opportunity again. All right. There is a contact on the EMA, but we don't know if we are going to see any entry on our 5 minutes. So right here, we've seen that this market got another contact with the EMA. So let us go to 5 minutes again and check if there is any hope for entry. Do not forget to subscribe. So on our 5 minutes, we are looking for a break of structure. Turn your chart to a line chart, and we've seen a break of structure right here. We've seen a break of structure right here. All these lows was cleared by this zone. All those lows were cleared by this zone here. So we map it out. Once we map it out, it is for us now to go to our 1 minute. On our 1 minute, we are expecting a market to come inside that zone and give us a candle for us to take our trade to the downside. So we are going to our 1 minute. I didn't scale the M5 zone properly. Let me go and check before I did something wrong. Okay. Oh, you've seen this market. The market was already retested that zone. After a break, the market came inside that zone. Before we say jack, the market was already into this zone with this candle. So let's go to 1 minute and check if we've gotten any any candle for our entry to confirm our entry. So right now I'm on my 1 minute. I'm on my 1 minute. So here is the zone I marked on my 5 minutes right here. Here is the one I scale out. So here is the retracement that come into this 5-minute zone. So here is the bullish candle that come into this 5-minute zone, and here is the candle, is the bearish candle, opposite candle that happens. So I'm going to place my trade at this opposite candle, which is right here. I'll pick my short tool, I'll place my trade here, and my stop loss has to come a bit above that zone, and I'm still going to target my H1 low, which is the first target I target before. So I'm going to target that my H1 low, so which is this black line right here. So this trade now able to give me 1:9 arrow. So on that one trade, I was able to make, on that one trade, you are able to gather 1:15 plus 1:69 plus 1:9. If you were to risk $5 times 5, on that one trade, you've been able to gather $465 on a single trade. But if your capital is not up to something that you risk up to 5%, no matter any capital you come in with, even though it is something that you risk $1 on, that is to say 69 plus 15, that is, if you are risking $1, which is 69 plus 15 plus 9, you can still be able to gather $93 only on this one trade. That is, we are risking $1. So patience is the key. At times, I may stay a week without seeing an entry in this market. I may stay a week without entry because I don't want to go and lose all the capital I have. Then I will not be able to trade. Just that we have to try our best to gather, to make sure that the little capital that we have, we should try to have patience with us, so we compound the small capital we have to a bigger capital. Once the capital is big, this strategy you are using is going to suit you, is going to help you with a lot of things, because only one trade in a month will be okay for you. There is nothing you are going to look for again. Only one trade in a month is going to be okay for you in the future. So this is what I said, let me bring to your notice, so that you should go and backtest this strategy and check it yourself. See how it goes. If there is a way or anything you can change to suit you, then fine. But this is how you can approach this market, just with break and retest. Instead of you to trade a break and retest that will give you 1:2 RR, implement it the way I do, and you will see the real result. So this is Aqua FX as I sign out. Peace. But do not forget to subscribe to this channel. Turn on notification bell for more tutorial videos to come.